China's industrial output and retail sales grew at a faster than expected pace in October. All stocks are higher in the Asia-Pacific region today, with the Japanese Nikkei index up 2.52% and the Hong Kong Hang Seng up nearly 4%. That's after we saw retail sales growing by 7.6% last month from a year ago. That's above the 7% growth forecast by economists. Industrial production as well rose 4.6% year-on-year in October. On the geopolitical front, the US President Joe Biden and China's President Xi Jinping are also expected to meet in person in San Francisco for the first time in a year. Let's get more on this now with Mike Ingram in London. He is Senior Market Strategist at Active Trades. Thank you very much for joining us today. Right, so Mike, let's start with retail sales. What is the key driver behind this bounce? Because despite this, we saw a contraction in PMI last month for factory activity. What can we say about this mixed picture we really are observing in China?
Yes, well, I mean, October is an interesting month because the Golden Week holiday, which lasted an entire week in China, was in October. It would have depressed factory activity. There would have been a number of factory closures during that month. And also you'd have to say that, like Black Friday in the US and elsewhere, it does impact retail activity as well to the upside. So perhaps that explains part of the divergence. Also, if you look at the retail sales number in a bit more detail, you can really see that headline surprise, upside surprise, was really driven by low ticket items, things like sportswear, people going out to restaurants, spending more on alcohol, tobacco, etc. Not really any of the really large, big ticket items that you'd want to see from a confident consumer in China. So yes, the headline number's good. Look at the detail, perhaps a bit of a more mixed picture, and perhaps not quite as much a contradiction with that weak industrial PMI number.
Interesting. And how are policymakers going to react to all that?
Well, I think from China we'll see more of the same. I mean, China has been one of the few countries in the world where the central bank has been trying to reduce interest rates. China, if anything, has something of a deflation problem rather than an inflation problem. Here, however, of course, China's room for maneuver is very much constrained by what, for instance, the Federal Reserve is doing. Obviously, they have their exchange rate to manage. So, they want to continue cutting rates. They've been cutting rates for almost 2 years now. And also outside of that, selective support for the automobile industry, selective support for the consumer and the services industry, and overall trying to rebalance the Chinese economy away from excessive investment, excessive speculation in real estate, and back towards a broader consumer recovery.
Deflation, right? Very, very different from the rest of the world right now. Mike Ingram, thank you very much for your analysis. And now let's go to other top stories from around the world. Inflation in the UK has fallen to a 2-year low of 4.6% in October, down from 6.7%. The reading was flat on a monthly basis. The sharp decline was thanks to a slump in gas and electricity prices after Britain's energy price cap was lowered. The Bank of England left interest rates unchanged at 5.25% earlier this month after ending a run on 14 straight hikes in September as it looks to wrestle inflation back down to its 2% target. Japan's economic growth has shrank more than expected in the third quarter by 2.1% from a year ago, the biggest contraction in 2 years. The decline comes as rising domestic inflation weighs in on consumer demand. Quarter-on-quarter GDP also contracted by 0.5% after expanding 1.2% in the second quarter. And Foxconn, the world's largest contract electronics maker and also known as Hon Hai Technology Group, has reported an 11.27% rise in third quarter profit, beating expectations. The Taiwanese firm, renowned for assembling consumer products like Apple's iPhones, says net profit for the July to September period rose to $1.3 billion, despite the ongoing electronics slump, which has badly impacted the global smartphone market.